Welcome to this webinar for Loans and Leases, simplifying FRS 102 and more. In this session, we will review settings for loans and leases and check nominal ledger accounts that are coming through from our accounting software. We'll create a hire purchase loan, a bank loan, a finance lease and an operating lease, and we'll also create those which are new in the current financial year, and also a lease that may have been put into place a couple of years ago, and see the impact within nettTracker. We can review the statements and the expected adjustments for interest as an example, and we'll process those adjustments and review the impact on our statements, and then check the accounting journal entries that are processed in the accounting software. And if there's any questions at the end of the session, again, we can answer those live. So first of all, we're going to look at a hire purchase loan and a bank loan, and both of these are actually going to be existing loans. So the loan would have been put into place a couple of years ago, and now you want to start tracking that in nettTracker and make sure the interest is adjusted moving forward automatically. What I have on the screen is what I would have used over the years, and I'm sure many of you would have had a similar Excel spreadsheet where you set up a loan. We're using sum of digits calculations. I've got a BMW finance loan agreement. I could see this was set up in April 2024, and as of December 25, this would have been the balance in my accounts, 28,695.37. Similarly, I've got a funding circle loan. Again, that was set up October 2024. At the end of December 25, my loan balance was 83,783.65. So Excel sheets are great, but what they don't do is they don't automatically put this interest amount into your accounts every single month. And we've got to come back here and we've got to check all of these balances every year. Now, once you've got loans set up in nettTracker, you'll never have to review the spreadsheet. You'll never have to make any manual journal adjustments again. And instead of having to do just one annual adjustment, you've got a monthly recurring adjustment that will happen automatically, extremely accurate, and will reflect exactly what the interest should be for each month. I've created a brand new QuickBooks file just so it's easy to see the values that are already in here, and I've created a couple of opening balances for the two loans in question. It will work exactly the same if I was using Sage Cloud Accounting or Xero. For this example, I don't actually have a client file set up at all yet, so I want to show you exactly how quickly we can actually get the client file set up, add the loans and the leases. So the first thing I want to do is go to Account and create a new company. I've got a subscription in place. I want to connect a new client to a QuickBooks file. So we're following the usual process of connecting an app. Very straightforward. Selecting my firm, selecting my client, and accepting to connect. Some basic information will be brought through from my client file, basically the name, the currency, and the first financial year that I want to start running in. Now, if I need to start from January 2025 as an example, or March, April 25, then I could simply do that by changing these dates. But in this example, I've already filed the accounts to December 25, so I'm actually starting here from January 26. I want to just use the perpetual year-end function, so that means that when we get to the end of the financial year, it will just automatically roll forward into the next one, and I don't need to worry actually about a year-end process. I'm taken immediately into the company settings area, and for loans and leases, there's really very little that we need to do. One thing I am just going to double check is if I go to the nominal accounts, what we can see is a list of the chart of account categories that have been brought through, and as we scroll down, I could see there are only two balances in here, and that relates to the two loans that we set up. Okay, so let's get our first loan in place. So I'm going to go to the loans menu on the left and select new loan. I'm going to give the loan a name. You can add a description and a reference, but it's not mandatory. I will add the original loan, which was 67,163.40. The monthly repayment amount 1949.12. 36 expected repayments. So my total interest has been calculated, and the interest rate is also displayed there as well. We can choose whether the interest should be calculated on a straight line basis or sum of digits, which means that our interest will be higher in the first few months and will gradually reduce as the capital is being repaid. We can choose the interval of the expected payments, and then if we come to the second part of the screen, I'll put in the original loan date. So I'll put in the first day of that month. And the same month I'll put in the ending date. So that will mean that I'll definitely have interest calculated within month 1. And this is the important part. When do I want nettTracker to start creating journal entries for this loan? Now, in this example, the loan started in 2024, but I'm actually preparing the accounts in now from January 26 onwards. So imagine we've already done the accounts to December 25. I don't want to create any additional postings in my accounting software. So I only want to put those in from January 26. Which two accounts are going to be affected by the journal entries? So our double entries are going to be, the first one is going to be to hire purchase interest, and the account that's going to be credited is going to be BMW Finance. So we're going to be debiting our interest and crediting the liability. If you're using classes and locations and you've turned on the feature, you could add those two, departments, cost centers, tracking categories in 0 as an example. So now I'll simply choose to save. So let's take a look at what has been created. If I go to the loans menus and now select statement, within our loan statement, within the hire purchase area, we can see our loan. We can see the details of the loan, the interest being applied, when it started, the monthly repayments, and I can see the opening balance. This is the opening balance of January 2026. This is the financial year that we're running in currently. We're running in January 26 by default. That's when we started. But if I actually look at the loan in detail, we chose to set all the details up with a loan from April 2024, and that is there, April 2024 in the details. If I look at my expected journal entries for interest, then it's starting from April 2024, but all of those months are flagged as being posted. So posted successfully, because I don't want to actually create any postings for the previous years. It's not until we move forward a few months where I can see January is flagged as not yet posted. If I take a look at the dashboard of this file, there are no assets, no prepayments or accruals. But if I come down towards the bottom, what I can see is that I've got one loan that I've set up, and I can see the balance per my balance sheet for that loan. So that loan balance agrees precisely. Okay, so what I want to do next is create the funding circle loan. So I'm going to go into loans, apply a name. I don't need the description or reference. The original loan balance was 125,000. The monthly repayments 4,748.66. 36 repayments. The total interest being at 45,951. I can see the interest rates being calculated. Again, I want to do this over sum of digits. It's monthly. The original loan balance started October 24. And again, starting my journals from January 26. In our account, we've got interest, bank loan interest due, and funding circle as the liability. Save. Now that I've saved that loan, I can see my loan balances have increased. I've got two loans, and again, both values agreeing to the balance sheet. If I look back at our statements, I can see I have the hire purchase loan. We've only got one particular loan type in here for loans, hire purchase, and the operating and finance lease, which we're going to come on to. So the bank loans sort of come under our hire purchase at the moment. And we can see the interest rate and the expected payments. Now, I've not actually applied any interest at all on those loans. So I've not run any period end routines. So what I want to do is actually just run a period end. And we'll do our first period end actually to be up to the 30th of June. So I'll choose to run. So that's going to run actually 6 months worth of interest for both of those loans and post monthly adjustments. Looking at the statement, we can see the interest that's been applied against both loans. We can see the expected repayments that would have been made over the last 6 months, and what our expected closing balance should be, and what's due in 1 year and what's due after 1 year. Now, after processing those month ends, if we look back at our dashboard, come down to the loans area, in fact, I'll do a little refresh, I can see we've got a difference. And that difference in this example is because one of the BMW loan payments hasn't been made. So the monthly payment for the loan is 1,949.12. So if we have a difference, it shouldn't never be to do with interest, unless our journals have been deleted, because the interest is automatically updating our statements and automatically updating our liability in the balance sheet. So they should always be in line. We're always accounting for the expected repayments per our loan statements, but if those loan payments haven't actually been made, then we're going to have a difference, and that's what we've got there. And it could be that the loan payment has been made and just been put to the wrong account, and we can investigate that. If I look at my accounting software and just double check that the payment has now been made or created, and so I'll just save this. If we go back to nettTracker, we can see the loan balances are now back in line. As well as having the dashboard for reference and our loan statements, if we do go to the loans menus, we have the ability of downloading those statements into Excel, and we can also look at our projections. So the projections will include the projected interest, the total payment, and the net repayment of capital, and that's included there within each of those lines. And the projection also can be downloaded into Excel. All right, so we'll leave loans there for now, and I'll look at all of the accounting entries that have been made in the accounting software towards the end of the session. What I want to do now is actually move on and look at operating and finance leases and how nettTracker handles those. So there's a few differences with regards to leases and loans. So leases are connected to our fixed assets. So we'll need to review our fixed asset settings really before we set a lease up. Now, creating a lease will actually create our asset with a right of use value at the same time. Interest will get calculated, applied to the lease. Depreciation is calculated against the right of use assets. And all of the required journal entries are created and posted automatically for us. So in the first example, I'm setting up a finance lease where we've actually paid a deposit, which is non-refundable, of £5,000. We've also paid some legal fees of £1,000. We've had an incentive back of £500. And our monthly payment is £1,300 per month. That's going to be over the next 36 months. Now back in nettTracker, because a lease will be connected to a fixed asset, we need to create an asset group. So I'm just going to do that quickly for the finance lease. So the group name I'll call Finance Lease. You can add a depreciation rule, but it will get overwritten by the lease itself. We now create the account mappings between the fixed asset and the chart of accounts. Now, if you haven't actually created the chart of account categories in the accounting software for the leased assets, then nettTracker will create those for us. So I'm actually going to let it create a couple for the balance sheet there. I do actually have a depreciation expense already in place. Don't generally dispose leases that often, but I will just allow nettTracker to create the accounts that I need for those as well, and I'll just choose to save that there. With my asset group now set up, I'm in a position to create the lease. So I do that by going to the left menus within loans and selecting new lease. I'm going to call this finance lease. Very similar to the loan, you can add a description and a reference. Now with a lease, you can enter what is the current market value of the asset. So if you were to buy the asset brand new today, what would that actually cost? So this is for a fairly recent asset. So I do know what the current market value is, and I'm going to put in here 50,000. If you don't know the value, we can use an interest rate, and I'm going to come back to that on another example. Now I'll just move down to the next sort of section. We paid a deposit which was non-refundable, 5,000. We had legal fees. We received an incentive. What is the expected value at the end of the lease term? Now, if we know what that should be or is likely to be, we can enter that, or it could be a balloon payment, which again is like what the value of the asset might be at the end if I need to pay extra. So the end of the asset life, or the lease life, I should say, £10,000 at the end of the lease. How much is going to be paid in each period? 1,300, and this is over 36 months. Again, you can choose whether your payments are monthly, quarterly, or annually. And with a lease, you can choose whether you're paying in advance or in arrears. And this does actually impact the right of use assets because it's all about movement of cash flow. So if you're paying in arrears, then you've got longer to pay effectively, and you're less interest or that would be applied generally. So this is in advance. Just come down a little bit further. So we have the lease date, which I'm going to put in here as the 1st of February 2026. And our first payment, which is going to be from the 1st of March 2026. And we're actually going to start from this financial year. So I'll put in from 1st of January 26 anyway. Which asset group is this going to be connected to? finance lease, the profit and loss account for our interest on the lease. So I'm going to put on here, I type in there, we've got interest on finance lease. I've got a profit and loss account for that, and the balance sheet account, which I have in here as finance lease. Don't confuse that with, so all of these accounts for with asterisk NT are where the asset group was created, and nettTracker created the required chart of account categories for mappings. But this is the finance lease liability that I need here. So with all of those in place, I can now choose to save. Now, if we do take a look at the statements, come into hire purchase and now choosing finance lease, we can see at the moment here is the lease that I've created and what the opening balance of that lease is going to be. And if we look at the details of the lease, we can see on the right hand side the expected interest adjustments over the lease term, the principal postings, which will actually include the initial right of use value adjustment and the net repayment each month, repaying in advance, so there's no interest in month one, and a number of repayments, and then we've got 36 months worth. The left-hand side of the screen shows all of the original details we entered, but also includes the related asset. And if we click within that area, it will actually take us to the asset that's been created. We'll see against that particular asset the expected depreciation postings, which are all straight line over the lease term. Before we create another lease, let's just have a quick look at the dashboard. So we'll go to the dashboard. I'll do a refresh as well. So what we can see initially is we've got a net book value of our fixed assets, which in this instance is the single right of use asset we've created. But you'll notice there's a difference. There's nothing within the accounting software yet. And we'll have a similar sort of difference actually. In fact, almost the same difference within our finance lease area. The reason for that is because nettTracker will create all the required journal postings. However, we do need to run period end. So all of the required journal postings are in a draft state at the moment until we run period end. So I'm going to come into period end and run the last period again. And now with the dashboard refreshed, our finance lease is in agreement, and so is our fixed asset register. So the next thing I want to do is create an operating lease, but some operating leases can be treated the same way as a finance lease when it comes to the accounting entries that are made. Now, in fact, if I go to my settings and look at the asset register area, in the background I have created a couple of extra asset groups. So one that I've actually called operating lease, finance lease treatment, and another one for operating lease, which are strictly operating lease accounting adjustments. So if you're following accounting ASC842, then we will be putting the entries to lease expenses in the profit and loss, as opposed to splitting between interest and depreciation. So the next thing I'm going to do is create a lease for an operating lease, but one that we can actually treat as a finance lease. So I will go into our loans and leases menus and choose to create a new lease. I'll use the type as finance still, and I will put in here warehouse lease. Again, I won't use the description or reference. I don't know the market value of the warehouse, so I'm actually going to enter 0 against that, and I'll use an interest rate of 12%. When we come down to the lease details, any deposit would be actually refundable in this instance, so that would be held in my prepayments if there was a deposit there. There are other payments that I know of apart from what is paid actually every single month. So I'll put the lease payment in here as 3,000, and this is for over 120 months, so a 10-year lease, again being paid every single month. Just coming down towards the dates area, then I'll select the lease starting date as actually being the 1st of January 22. The first payment actually being end of January, and the nettTracker processing start date again being 2026. The profit and loss account again is going to be interest on finance lease. I'll have here the balance sheet account. I'm selecting as the lease for the warehouse, and then I'll select to save. If we take a look at the statement for leases, we can see that our warehouse lease is within the finance lease list, and we can also see when it started, which was from 2022, our monthly payments, and the opening balance, which will be the opening lease liability as of 1st of January 2026. If we take a look at our lease in detail, on the left hand side of the screen, we can see the asset value that's been created, 211,000. And we can also see on the right hand side of the screen the interest that will be calculated, and all of the interest from 2022 up until the end of 2025 will be marked as posted. The next thing I'd like to do is take a look at the related asset. Now we can see in this example that although the lease is correctly started from 2022, because the way that the asset has been created, it has been created with the date 2022, but the depreciation is kicking in only from January 26. So we need to make an adjustment for that. I've calculated what the depreciation should have been up to the end of 2025. So what I'm going to do is create a depreciation adjustment, and I'll date this January 26 and add the additional depreciation and mark it as closed. This has adjusted all of the depreciation moving forward. We will need to create a manual journal entry to reflect the lease liability for the existing operating lease and the right of use asset value that we've been using for several years. First of all, I do want to take a look at the asset register. So I'll just go to the asset register. And if we look at our option here, operating lease with a finance lease treatment, there is our warehouse, and we have the values of the original cost, well actually our right of use value cost, and the depreciation brought forward. If we take a look at our lease statement again, so I'll just go to our statements and look at our finance lease area. We've got the warehouse and we can see the liability. In our accounting software, I've created the journal to reflect the present value of the lease liability and the asset, the right of use asset that we've introduced. So we can see here the value of the lease. We can see the value of the asset that was created initially, the depreciation, and we can also see the adjustment to our retained earnings. Back in nettTracker, we'll go back to our period end, and we're going to run June period end again to bring all of the interest up to date for the leases that we've created. When we return to the dashboard, we can see the values per our asset register agree back to the balance sheet, as do our loans and leases also agreeing back to the balance sheet. I'd like to finish off by creating an operating lease that actually follows the required accounting treatment for operating leases, especially if you're following ASC842 accounting standards as an example. One of the things I'll need to check first, if I go to my settings and look at the asset register settings, I've set up an operating lease group. So I had the operating lease, finance lease treatment, but I've also got operating lease here. And if I look at actually the mappings for the profit and loss, the depreciation expense, I'm mapping that cost actually to leasehold expenses. So where a traditional finance lease will actually split between depreciation and interest, for an operating lease, all of the costs go to leasehold expenses. So let's go ahead and create our operating lease. So I'll go to my loans and lease area, create a new lease, this time specifically selecting operating lease. We'll call it office lease. I don't know the market value, and we'll use 11% interest. There's no deposit. I'm simply going to put in what the lease payments are. So I'm going to put in here that each lease payment is $2,000. And this is over a 5-year period, so 60 months. We're paying monthly. We're paying in advance. The lease date is from January 26. The first payment, 31st of January 26. And nettTracker starting from January 26. We're linking this to the asset group operating lease. The profit and loss account for this is going to be leasehold expenses, operating lease. The balance sheet account for this is operating lease office rent. So now I'll simply save. Now if we take a look at the asset that's been created, the right of use asset for that last lease, within the details, the depreciation is calculated differently to that of a finance lease. So a finance lease, depreciation is straight line over the lease term. For the operating lease, depreciation is basically whatever the monthly rent is less whatever the interest has been applied against the lease. Now with the payments being made in advance, there would be no interest actually in month 1 of the lease payment. So here we've got our depreciation being 2,000 because there's no difference. But moving forward, there is a difference, and it's slowly actually increasing because the interest will decrease as the capital is repaid against the lease liability, and then the depreciation begins to increase. As before, no journal entries will be created for the initial right of use asset value and the introduction of the lease liability, and all of the interest and depreciation that's due between January and June in this example. So we need to run period end. So I'll go to period end, the left navigation, run the last month again, and bring all of our journal entries up to date. If we look at our nettTracker dashboard, we can see within the asset register area that the values per the asset register agree exactly back to the values on the balance sheet. And if we scroll down to the loans and leases area, that we've got loans and finance leases and operating leases, all of those liabilities again agree back to what's on the balance sheet. If we look at our accounting software, we can see all of the journal entries that have been created during this session. Generally, nettTracker will just create one journal entry per month, which will include all of the adjustments for your assets, liabilities, prepayments and accruals, depending on what you've actually got set up. Because what we have done is create a lease, run period end, create another lease, run period end. Additional journal entries have been created to catch up on anything that's been missed. If I take a look at the journal entry dated the 1st of January here, this reflects the creation of the new lease and the right of use asset value. If we take a look at the profit and loss report for this file that was blank at the beginning of this session, we can see the impact that nettTracker has made for the interest on the bank loan, the interest on the hire purchase agreement, interest on the finance lease, the operating lease costs, and the depreciation on the right of use assets. If we drill down into the operating lease cost as an example of one of those months, the entries reflect the interest on the operating lease and the depreciation on the right of use asset. So as we've seen, leases are connected to fixed assets. Fixed asset settings do need to be in place first, and creating a lease will create the asset with the right of use value. Interest is calculated and applied to the lease. Depreciation is calculated against the right of use assets. All required journal entries are created and posted automatically. Statements are updated and can be viewed for any period. During this session, we've reviewed the settings required for loans and leases and checked the nominal ledger accounts are in place. We've created a hire purchase loan, a bank loan, finance leases, and an operating lease, and we've reviewed the statements and expected adjustments, processed the adjustments and reviewed the impact on our statements, and checked the accounting journal entries processed in the account software. If you're ready to start saving time on your month-end processes, finance leases, operating leases, loans, prepayments, accruals, and your general fixed assets, then head over to nettTracker.com, where you'll see the option on the first page to try for free. Thank you for watching.